Okay guys, welcome back to another collab video with WolvesOfCrypto and myself, MegaWhale. We've got a lot to talk about today. A lot is happening for the Bitcoin chart. I just want to go ahead and introduce Wolf. Wolf, how are you going today?
Not too bad. Just scouring through the charts as usual.
Yep, cool. All right, so we're going to start with short-term analysis, and then I think Wolf's going to go ahead and jump into a macro. Do you want to talk about real quickly what you're going to go ahead and talk about today, Wolf?
Yeah, well, I want to talk about obviously the big question on everyone's minds that we'll get into this video is if we're gonna drop below the critical level at 28 or pump above the critical level at 32. And I want to go into both of those scenarios. I think you're going to go into it a bit briefly, but more importantly, the dead cat bounce scenario is what I'm going to be looking at quite a bit.
Sure. So I'm going to talk more about the current short term for Bitcoin and I would say the current macro structure. I'm also going to be talking about more or less about, the potential for us to go lower. So Wolf's going to kind of talk more about, that bounce that he talked about. I'm going to be talking more about that lower potential drop that we could see. So we're going to go and get stuck right into it. We're going to talk about this chart to start off with. We see a descending wedge, a falling wedge you can see here on the Bitcoin chart. And we can confirm, and I know I was talking to Wolf pre doing this video, we're talking about this wedge a fair bit. And just talking about, because there's a few anomalies on this wedge that we don't really usually see, but we can use that RSI to confirm this. And first and foremost, we do have a bearish divergence over here. And we use that second point of resistance on that divergence to indicate our initial starting point of that descending trend line. So we have that point there. We can draw that trend line down, finding resistance on this point here. And we had that triple top or that triple resistance within that range between 44 to 45.5 thousand. We had that breakout of that resistance line over here on the horizontal chart, rejecting from that 200 moving average. Myself and Wolf were talking a lot about that when that was actually occurring, but we can see we actually had that fake out. So we didn't hold above the RSI. We confirmed a drop downwards and resistance on that pushing down, confirming in fact that was a fake out. Moving down from there, we've kind of followed into this descending trend line and formed this convergence of the price between this downtrending, downsloping support line that we can see represented on the price action and RSI. So that's kind of the macro overview at the moment. Wolf, did you want to add anything to that real quickly?
No, I think that's pretty accurate, yeah.
Pretty accurate, cool. So on the short-term time frame over here, guys, we do have what we would call a sideways consolidation. And the price, and I'm sure a lot of Wolf's followers and my followers have heard a lot about this before, but prices move between demand and supply. They move between supports and resistances. And we can see that over here. It's kind of like a ping pong table. We kind of bounce between the support and resistances, and the direction of which the trend continues is generally the direction of which the price breaks through. So we can see over here we have that $32,000 trigger. And on my channel, all my followers would know I've talked a lot about $32,000 as a trigger line in the last few weeks. We can see we got rejected from the $32,000 trigger, pushed downwards, found support along this area over here, and we've had that another attempt, a second attempt upwards, but not really making any headway into that $32,000 region. And I've said the entire time, until we break above 32K and daily close above 32K, we have to assume the price is going to continue in the direction of which the trend was before we entered this sideways consolidation. Therefore, we have to assume the price will continue downwards to the bottom of the support line, which is sitting around 24,000, which will be that 24K target again. So I think another question I get a lot is, what happens if we break above 32K? Because it's very obvious what happens if we lose this support line, we head further down. We've talked a lot about, a downward price target, but if we break above 32K, guys, I know Wolf will talk about this in a second, but if we do break above 32K, we do have a target of this gray zone here, which is that 36 to 37K region. The only problem is, when we were talking about this region before, the price was around the 22nd of May, and it was very attainable for us to push upwards here, because we still have that downward sloping resistance acting as a resistance zone above that, on top of that horizontal resistance zone. Now we can see that that resistance zone is actually outside of that downward sloping resistance of the wedge. So it's more likely to assume if we break 32K, we will find resistance on this wedge and we will not push higher, and that is another possibility. Wolf, I'm going to hand it over to you. I think that's enough about the short term. We'll go on to the longer term with you.
Sure, yeah, sure. Okay, so longer term, I know you say longer term. One more thing I'd just like to add to the shorter term. Yeah, so obviously you have that descending wedge formation. that's fine. We've talked about that. There is also another line that I am looking at now, which is this line that I've drawn in here, right? And you could actually make that into an uptrending line there, and you can see that the next support level on this short-term kind of drop we're seeing right now will be at 30K. We might actually be seeing the breakout of this sideways consolidation region much sooner than a lot of people would expect, right? I don't think it's going to be as long as this massive period we saw here in May to July, right? And in fact, I would like to just bring up quickly, because I think you didn't bring it up there. Interest rates decision is on the 16th of June. That's going to be a catalyst for a lot of volatility that will likely push us somewhere out of this range. And then the following day, we actually have a $3.3 billion options expiry, which is the biggest in, I think, 8 years, right? And the second biggest was only in January, which was $3.2 billion, and that happened on this drop. I think it was this drop over here, right? Which is basically when we dropped down from this 40K level all the way down to the 32K level. So pretty big events there in terms of volatility. And so that's what led me to the conclusion yesterday in my last video, that we're probably going to be seeing a move out of this range, within the next probably week and a half. And I do want to make it very clear, I think you will agree that although right now it is more logical than not to assume that we're probably going to be continuing downwards as per just basic TA, we do need to understand that it is probably very illogical to make any major moves and enter any major positions while you are in this range. We need to be waiting for a breakout either above 28.6 or 32.6 is what I have personally. So yeah, wait for a confirmed trend direction. And I think you'd agree with that. Would you agree with that?
Yeah, well, I've been telling my followers for the last few weeks, until we break a directional move from that range that we just talked about, and mine's 32K, yours is slightly higher, but I think 32K, you should just be taking small scalps. You shouldn't really be looking for any macro or larger term swings, because until we really know the price direction, you got a 50-50 in reality, and a 50-50 is not really the odds you want to be taking when you're trading. So yeah.
Correct. Yeah. Okay, so moving on then. Okay, so you talked a bit about what we will talk, and you probably talked a little bit about it there. What happens if we drop below? We kind of already know. Like it's one of the things we've established quite firmly. We can kind of assume that, well, we're just going to go down to either the 200 or 18K you said, or possibly even the worst case scenario, even 12 to 14K. But we're going to look at that more extensively in a second. But what happens when we see a dead cat bounce? That's a bit of an interesting question, because it is certainly a possibility in this region. And so for me personally, this is what I would expect to see if we see a dead cat bounce. And it does line up quite well with the wedge and with the 36 to 37K kind of, supposed target there. So what we've seen historically in bear markets is actually very similar to what we're seeing right now. And this is what I'm basing it off, right? So in 2014, what we did, we had this 5-step kind of correction in the bear market. And we're kind of on step 3 right now, but this is what it was, right? So we topped out, we went downwards, we formed an uptrending line. We lost that uptrending line, okay? We consolidated below the uptrending line. We bounced back up to around the 200-day SMA, rejected off of it, or rejected the price action near it, and then bottomed out in the bear market. 2018 was very similar. All right, so moving across to 2018, we formed that uptrending line, dropped below it, consolidated below it for a bit, bounced up, rejected from a 200, consolidated, and had the final correction. And as of right now, if we do see the dead cat bounce, it would seem very likely that's exactly what we're going to be seeing, right? So again, we formed an uptrending line, a very distinct uptrending line. It's impossible to miss. Drop below it. We're seeing that consolidation below it. And if we do break above, 32, 32.6, we will most likely be seeing a bounce to around the 200-day SMA, rejection off of that, come down, a bit more consolidation, and a drop down to the bear market bottom. That's if we do see a break above the local range we're seeing now. Now, obviously, that doesn't need to happen, but upon the scenario that it does, that's what I would see as the most likely move. Now, I suppose the next thing you'd have to ask is like, well, like Whale just said, well, the descending wedge isn't necessarily permitting us to go as high as 36K. Well, one kind of solution to that is, well, we could see a fake out just like what we saw in March. Another solution to that is, well, that's normal, right? Because if we're looking at what happened in 2014, you'll notice we didn't actually quite get up to it, right? We almost got there and we got rejected from the rough region. It could be a similar circumstance in which we get kind of close to it, like 35K or something like that. and then we reject from that region, and then we drop down. But that's just all speculation at this point. But that's the speculation that I'm going to see as the most likely scenario if we do break above the 32.6K range. I don't necessarily see a scenario in which we go higher than the 200-day SMA, and then I don't necessarily see a scenario in which we break above 36K on Bitcoin. But yeah, that's what I wanted to talk about there for the dead cat bounce.
Yeah, that's good. I agree with that. Do you want to go on and talk about what was the other chart you wanted to talk about real quickly?
Well, I did want to talk about as well. I'm not going to talk about the 4-year cycle too much, but I wanted to talk about this chart a bit more in the sense that, you know, why would it be a dead cat bounce? Why wouldn't it just be a bull market continuation? And firstly, I mean, obviously the 4-year cycle doesn't necessarily permit that. Secondly, what we need to confirm a bull market continuation, in my point of view, is actually a break above the 50-week SMA. And that, as of current, is sitting all the way up here at 44K. Why am I waiting for that? Why do we need that? Well, I think that the trend right now on Bitcoin, as I see it on the macro time frame, is that basically we lose the 50, we end up at the 200, right? That's happened on 3 separate occasions. Okay, it happened in 2014, 2018, and during the COVID drop. And so it is a confirmed trend, as there has been 3 data points. And, you know, as of right now, in order to invalidate that trend, in my opinion, the only way to invalidate that trend is to break above the 50-week SMA without testing the 200. And so the way I would confirm a bull market here is if we actually just bottomed out right here, okay, we saw a dead cat bounce, it went higher than we expected, and a break above the 50-week SMA. Upon that break above 44K, that is what would confirm a bull market to me. Now, I see that as, you know, incredibly unlikely, but that's what we're keeping in the back of our minds here. I don't know if you agree with that. Do you have a specific thing that needs to happen for you to confirm a bull market? I'm interested to hear.
I do, and I'll get to that, but I actually want to I want to ask you, can you go ahead and bring that chart back up? I just noticed something that I haven't really seen before. I haven't seen that chart from yours too much. Can you go ahead and bring back up that 4-year cycle, or those little ratios you had?
Sure thing. Yep.
Cool. Can you actually I'm just zooming in on that last 52-day bar, so that last 52 bar that you have at the moment. I'm just curious to why, or I want to kind of test your brain a bit over here and just kind of see what I think as well, is you have that period starting from that top in November. Can you go ahead and drag that actually, and can you bring it to the top that we saw in April of 2021?
Yes. Yep.
Because I'm going to go ahead and show you guys a chart in a second, and the chart is, so just leaving that for a second, I'm just going to go ahead and screen share now. We'll come back to that chart in a second. It's an interesting one because we have the chart that we've been showing you guys a lot lately too, which is this chart. And Wolf, you would have seen this chart we talked about in our last collab. And you can clearly see that, you know, every single blow of top has occurred within this upper channel, right? And we've had our rejection, so a drop down and rejection of that midline has confirmed our bear market. That's when our bear market initially kind of begins, at least. And if we go ahead and look at this scenario over here, we had that blow off top over here indicating the top of the bull market, and then we had a overextension or a over blow off top, which indicated the bear market start. So you could almost actually say the top for the 2021-2022 cycle was actually on the 16th of April 2021 and not in November, according to this chart. I think that's an interesting theory, and maybe you can, after this video, maybe spend some time maybe seeing if you can find any more. I'm not a huge fractal person, but I know you like your fractals a little bit more. Maybe try adjust it, see what happens if you maybe show us some more data.
This is interesting, right? Yeah, I get this question quite a bit, and a lot of people believe it. I know Roman Trading on Twitter, he's one of the big believers of the fact that this not recent, I suppose November 2021, that was a big fake out. It shouldn't have happened. You know, I've heard about that quite a bit. Now, the reason why I don't necessarily agree with that, and I know it makes sense on this chart here, but it's kind of one of those things which kind of makes sense and doesn't make sense at the same time, because the way that I've drawn my 4-year cycle chart, the only possible way that Bitcoin could have topped out and stayed in a line with the trend is in November. So it's like, it makes sense from my perspective, and it also makes sense from another perspective. And so to me, it's impossible to determine which perspective is the real perspective. And in my opinion, I think that it's much easier to just use Occam's razor to a certain extent and just assume that Bitcoin wasn't just lying to us in November and just assume that that was a real top. That's personally my
For
my
sure,
kind of view
yeah.
on it.
It's almost like there's validity or truth in both statements. It's kind of the answer, probably
correct.
somewhere in between. Now we're on this chart over here, I guess, and I guess another question that we get a lot is, if we do lose that lower support range, we'll go ahead and bring it up, this lower support range here. How low can Bitcoin go, and can Bitcoin go sub 15K? And it's a question that Wolf gets a lot as well, and I know I get a question a lot. And we're just going to go ahead and use this chart, but this is a really good macro chart on log scale to kind of pinpoint, areas of contention or support on the macro chart. We can see that this dotted trend line acts as our first bottom. So sorry, the dotted trend line acts as our first bottom. We can see a lot of support around that region. Usually 200-day moving average comes around that region, and we find that the price is actually just currently sitting right above that level, and that level is lining up to around 27,000 at the moment. We'll go ahead and look at our actual chart over here. That 27,000 zone is a little bit lower than the support range over here. But if we do go ahead and lose that level, that $27,000 level, we can expect the price to head down to this 200-day moving average, which we've seen on this instance over here, and potentially wick lower to around $18,000 to $16,000. I think that's the lowest we'll go. Going back to your question, Wolf, which was where are my bull market validations? What do I think would need to happen for us to go into a bull market? I think I'm going to go ahead and bring this chart up over here. And I'm not going to go into the details of this chart too much, but it's quite similar to my other chart with our 32K resistance, our support zone over here. We have that minor support at resistance at 36, 37. But I would like to see a break over 32K, a push into this range, and obviously we could get rejected from here and head back downwards. But if we do push over 37K and find it a support, I think we've got a very clear shot to around 48K. And if we break over this area here, this local high, flip that as support, that would be my trigger that we're entering a new macro uptrend.
Okay. So you're looking for a higher high, essentially.
Looking for a higher high on that macro, correct?
Yeah.
And I think
okay.
a good...
Do you mind...
Go on, sorry.
Go on. Oh, okay. Do you mind flipping back to your macro chart for a second?
Sure.
Yeah. I think that, okay, so correct me if I'm wrong. You are a believer in a more soon bottom on Bitcoin, right? I'm thinking November. You're thinking what exactly? July? Is what you said?
So my initial prediction was we will bottom out July. I think it was July 14th. Yeah. So July 14th, 2022. It was around 24K. So my statement was any time basically after that. That would be our bottom. I haven't really talked about when I think we'll enter a bull market again. I don't really have a time frame for that. Talking more about the bottom would be, not before the July 14th, 2020, 2022.
Mm-hmm. Okay. I was just thinking, what's interesting about this chart, I haven't thought about before, is that your chart here, the bottom solid black line,
sure.
If it takes longer for Bitcoin to bottom out, for example, if we bottom out in November, the 200-week SMA could actually touch and join up with that solid black line to make kind of the ultimate bear market bottom zone. I don't know. It's just speculation. I just thought I'd bring it up.
Well, we can go ahead and check that out. So what was your predict? Was it November, 20th? Or something?
No, just November, December, give or take a month, November.
All right. So let's just say November 28th. So what we can do a rise or a run. And we can just go ahead and copy that distance over, apply it to the current trajectory of that 200-day moving average to kind of figure out, how it's moving in the current term, and we can copy and paste that over, apply it to that distance, and we can kind of see, on average, and this is kind of how I predicted that bottom on average, where we can see that market end up. So we'd end up seeing that 200-day moving average sitting around 27K around that time.
Oh,
if
okay.
it continued at the current trajectory, give or take, a small standard deviation, probably 26K to 28K if the market flipped, yeah.
Yep. That's interesting. We could see, as per that, we could see the weekly candle bottom on the 200-week and then a wick downwards to that solid black line. Just speculation at this point, but it's interesting to talk about.
For sure, and I know we've talked about that a fair bit already, haven't we? That we don't really expect the price to bottom on the 200. We expect that weekly close above it, but we do think the price will head below it for some short time.
Yep.
I think I'm going to talk about Bitcoin dominance. Bitcoin dominance, guys, has been pushing upwards and is pushing into that 47, so 47 to 47.5 major resistance. Of course, Bitcoin dominance represents discrepancy between total money in Bitcoin compared to altcoins in relation to total cryptocurrency market cap And the higher Bitcoin dominance goes, the more money is kind of bleeding out of altcoins into Bitcoin. And this is exacerbated when the total cryptocurrency market cap is falling. So when you got a total cryptocurrency market cap falling and Bitcoin dominance rising, you have this significant bleed out of altcoins. And we're seeing that happen right now, which is like altcoins are getting wrecked. And if Bitcoin dominance pushes through this range, we can see we've got massive resistance at this range. It can definitely push up to 49, potentially higher, and we can see altcoins lose, 50 or 60% more of its value.
Mm-hmm.
Okay, yes. I'll pass it back to you, Wolf.
Sure. All right, so I would like to talk about this briefly. Okay, so I talked about the options expiry before, and this is kind of changing the tune of the video here a little bit to go into traditional markets, because I know you've got a lot to talk about in regards to housing and also interest rates, but I would like to talk about options expiry. As I said, this is happening on the 17th of June, the day after the interest rate hike. And what I said before was the largest options expiry in terms of dollar value we had in, I can't remember off the top of my head, I think it's 8 years, right? Previously was in this week here in January, okay? So that's quite interesting. Now, this week in January, again, largest in 8 years, we saw the largest red candle on the S&P 500 by percentage since all the way back here in October 2020. So it's very significant, 18 months, right? Largest red candle in around 18 months, a little bit less than 18 months because of that options expiry. Now, we have an even bigger options expiry than here in January in about a week or so's time, just after the interest rate hike. And we know that interest rate hikes are generally bearish for the market. And this options expiry here was bearish for the market. Given the macro environment hasn't changed too much since January, we can use kind of a logical kind of extrapolation of data and assume that this is probably not going to be too good for the market either. And assume that, hey, potentially we could see a massive, I'm talking a massive correction on the S&P 500 in the month of June, which could lead to Bitcoin going down quite extensively and actually breaking below the 28K support line and kind of triggering the macro bottom maybe a little bit sooner than we expect, or at least kind of bringing Bitcoin down a lot lower than we expect. Because again, the macro bottom, like the way I've talked about it is, although I predict the macro bottom is going to be in November, I'm not necessarily saying it's going to bottom out on the 200 week. It doesn't matter where it bottoms. I'm thinking it's going to bottom in November. So again, the 200 week SMA, it's an assumption, but it's not a certainty. And I thought that was interesting. I just talk about that options expiry. So expect a big week next week on the traditional markets, and hence expect a big week on Bitcoin. I think next week is going to be the week we make a decision for sure. But I'll let you talk about interest rates, etc.
That's an interesting one, the options expiry. It's not something I really go ahead and look into too much. I'm not, I don't really stick around for that kind of information too much. But yeah, definitely valid and definitely something to keep in mind because, like you said, I don't know if you just mentioned it, but we were talking about it before the video. In January, we looked at that candle, how our options expired, and we had a massive drop down. Yeah.
So 5% drop on the biggest options expiry in terms of dollar value in 8 years, and now we're having a bigger one.
Yeah, so we can only assume it's going to have a similar effect. And you look at that, and then you look at Bitcoin, and you say, well, Bitcoin's not looking too healthy right now. And if Bitcoin drops below that support zone 28K and that options expire as well, that could lead to a significant downtrend for Bitcoin. But yeah, look at the current market, look at the interest rates are rising. We're expecting interest rates to be hiked again on the 16th of this month. And we've talked a lot about this chart here, this kind of flow chart, which is where we've had inflation rise, of course, and we've already had this happen. So inflation's been rising massively. And I saw a picture online today. I don't know if you saw it, Wolf, but obviously myself and Wolf were in Australia, but America, I saw the fuel prices are just insane. They just keep going up. It's $9.50 per liter, like US dollars, which is like 15 Australian dollars per liter. It's unreal. It really is unreal.
Yeah,
and we're looking over here. We're $2 now a liter or something. $2.20.
Yeah, I think around $2.20.
Yeah. Anyway, so obviously inflation's been rising, pretty rampantly, and it's going to continue upwards, guys. And interest rates have been pumping up, as a strategy to combat that inflation and hopefully, taper it or bring it down. But what they don't tell you guys is that the governments, I'm going to sound like a mad conspiracy theorist here, but this is what the economic data suggests, and what the budget data suggests is that the governments actually like this high inflation because they're able to fund their economic growth through inflation. Not only are they able to fund economic growth through inflation, they're able to decrease citizens' buying power, right? And I'm not going to go into what that means on a, from a business strategy point of view, as from the government, or what it means, on a macro point of view for you or an individual. I'm going to talk about that in another video later on. I don't want to go into too much of that conspiracy theorist kind of area. But in reality, what this interest rate rise has caused the debt to equity ratios for consumers, for individuals, for partnerships, for mutually exclusive funds, for companies, etc. Their debt to interest ratios, debt to service ratios have been increasing. So they're having to pay more interest on their debt obligations. This has two effects really. Number one, it leads to lower household available cash flow, so people have less money. And it also leads to higher costs of goods and services, because not only is interest rising, so debt obligations are increasing, but inflation is still rising. So even with the recent, strategic increases in interest rates, inflation hasn't decreased. It's still rising. So we still have costs of goods rising. We still have interest rates rising. We still have lower household available cash flow, and obviously cash decreasing. And this has led to a scenario where retailers have been selling off their assets to increase their cash flow, to send that money, into their debt obligations. And we're seeing the same thing happen here with the companies. The companies have been selling off their assets, and obviously companies acquire a lot of assets on debt. In the last few years, interest rates have been considerably low, 0%, very, very small, and companies have acquired a lot of assets. Property, we're going to talk about property in a second, but stocks, and we've seen the stock market crash, and Wolf just showed you a little bit about that. Cryptocurrency, all these bonds, securities, they've been buying these on a lot of debt, and now that the debt obligations increase, the companies have to start offloading these stocks or these securities or bonds or whatever other assets, risk assets, to increase their cash flows, to make their debt to service ratios more positive, to give the illusion that their company is doing better, so the investors don't ask for higher premiums and continue to sell off their assets or their shares. And taking that from a governmental point of view or on a national point of view, we're looking at different monetary policies, such as in Australia. I'm going to use this as an example. In Australia, institutions, companies, and overseas buyers can invest in residential property. I'm going to go ahead and show you a few images on screen over here and show you a real world effect. And obviously we talked a lot about the stock market. We've seen how this impacts assets. We've seen how this impacts cryptocurrency. Of course, cryptocurrency dropped massively. We've seen how it affects shares. Shares have dropped massively. But looking at the interest on houses, so for example, with housing, more tangible assets, this extends to tangible assets. We can see in Australia in April, we had, so I'm going to go ahead and bring up March first. We had a owner occupancy of new valued borrower loans accepted fall by 2.2%, where investors are up 48.4% on the year, all right? So the housing market is being like pumped up or fueled by investors right now, where actual buyers, homeowners, are decreasing. Forward wind to this month, we can see a negative 12.8% year to change and a 7.3% drop in owner occupier and a 4.8% drop in investors. The housing market is down 6.4%. And like I said already, the housing market will fall. And this is just another example of the money flowing out of assets and into cash.
Mm-hmm.
Do you have anything to add there, Wolf? Or are you happy?
No, I'm happy with that. Look, the way I see it is that, right now, and this is kind of just to summarize what we're saying, economic situation, you can write it off. Okay. And so the only way that you can assume that, tying it back into crypto, that crypto is going to go up is if Bitcoin and crypto depegs from the economic situation, from traditional markets, which is extremely unlikely. And so the conclusion is quite simple, right? Most likely to go down. That's just the way to wrap it up in a couple sentences there.
That's correct. If you want more information on that topic, what Wolf just said, will cryptocurrency, hedge against the traditional financial markets? I think, not in my last video, but the video before that, I did about a 15-minute talk about why I don't think cryptocurrency will depeg and why it's actually, I would say, almost reliant on the fact that it's pegged to the US dollar or the dollars or fiat currency in general to actually grow. So anyway, with that being said, anything else you want to go over, Wolf?
Well, I think we should briefly talk about Crypto Academy, the usual spiel here.
Yep, I'll bring it up and then you can talk about it.
Well, yeah, Crypto Academy, fresh website, only made it about a couple of weeks ago here, looks pretty slick, but essentially become a trader, 10-unit course. It's a course in which you can learn everything to do with TA, from market patterns, indicators, everything you can think of, how to find trades, etc. If you're struggling to learn TA, or maybe if you haven't even looked at it too much, because I understand that a lot of people get kind of all the information they think they need from YouTube videos like these videos, right? And these YouTube videos are very helpful, but if you don't know how to analyze for yourself, how are you going to validate that information? How are you going to confirm whether it's correct? Because I can tell you right now, we have pretty good success ratios, but we're not so correct 100% of the time. There is a chance that you could pick up on things we miss on, and especially other YouTubers as well, who are a lot less accurate, right? So if you want to learn TA and learn how to trade for yourself, not only learn how to trade, but learn how to get the right ideas about the market for yourself, this is the way to do it in a concise and neat structure that actually consolidates that knowledge, because we've got worksheets here. We're not just chucking information at you and just letting you kind of work it out. Like a lot of other courses here, are actually giving you psychologically proven methods to help you consolidate that information and help you learn it and actually retain that information. And you can always come back here again once you buy it, once you enroll in the course. You have that information forever. You can flick back whenever you want. And this is not information that expires. It's very important, right? So it's not going to be irrelevant in a year's time. This is technical analysis. This doesn't change. This is psychologically proven and mathematically proven to work over long periods of time. And so this information is going to be relevant quite literally for decades to come, even though our voices will sound very different. But yeah, essentially, if you're interested in that, go to the website. We've got the contact details at the bottom page of the website. You can check it all out. And I don't know if you want to bring up the BitGet exchange, but I'll just briefly talk about it. Myself and MegaWhale Crypto do personally use the BitGet exchange for futures trading, and we understand that a lot of people, especially in Australia, and I think other countries as well, maybe the UK or Canada, I can't exactly remember, but I know Australia for sure, have some troubles with futures trading due to government regulation. You know how we feel about that. We think we should get around that government regulation, use exchanges that don't kind of have those rules apply. And that's why the non-KYC option on the BitGet exchange is perfect, because it means that as an Australian or as someone in a country in which futures is regulated, you can trade futures, and you can trade it at basically half the price of Binance, which is insane because Binance is meant to be the cheapest exchange. So go ahead and check out the BitGet exchange as well. But I think that's it. We should wrap it up there.
Yeah, that's pretty much all of it. And obviously, guys, go ahead and follow Wolves of Crypto on YouTube. I think you're at nearly 9,000 subs now, so that's pretty good.
Almost one.
Yeah, pushing up.
Same goes to you, for sure.
And head over and follow me over here. All right, guys. With that being said, we'll catch you in the next one.